Friends, let us now focus our attention on what is known as GRI for carbon accounting. So, it is about the GRI standards for greenhouse gas reporting. Mind well that GRI standards they do not replace the GHG protocol. GHG means greenhouse gas protocol. GRI is about disclosing, whereas GHG is about measuring. So, GRI standards for carbon accounting doesn't replace GHG protocol. It is about the disclosure of emissions in a standard reporting format. So, GRI is more about reporting the emissions in a standard reporting format, and it expects your numbers to be based on widely accepted methods. The most commonly used method is obviously the GHG protocol corporate standard. So, which GRI standards are relevant in carbon accounting? These are given in this slide. So, you see that the core standard is 305. So, GRI 305 is about the emissions. So, it is the main standard for carbon accounting disclosure, and this reports primarily the greenhouse gas emissions. There are other standards also in GRI like 302. GRI 302 is about the energy which covers the fuel use, the electricity use, and it fits directly into your scope 1 and scope 2 calculations. So, together GRI 305 and GRI 302, they are the carbon accounting backbone in GRI reporting. Along with this, we might also be interested in understanding the economic performance, which is reported in GRI 201, which addresses the carbon tax, the costs, and financial implications of emissions. There are 7 key GRI 305 disclosures. 3051 is scope 1, 3052 is scope 2, and 3053 is scope 3. So, scope 1 we had already discussed. It is the direct emissions which are measured. Direct means those emitted directly from the industry. Scope 2 is from the purchased energy use, and they are GRI 3052, whereas other indirect sources are included in 3053. Along with that, GRI also reports the emission intensity. So that comes in 3054. About 3055, it is more of telling the audience the reduction initiatives which the industry plans to take so that the emissions are reduced. If there are ozone depletion substances in the industry, especially if cooling is employed, those are reported in GRI 3056 standards. The other emissions, especially the nitrogen oxides and sulfur oxide emissions, they are included in GRI 3057. So these are the 7 key disclosures included in GRI 305. So as discussed earlier, 3051 which is scope 1 emissions, which are the direct emissions, and that include the on-site fuel combustion, diesel, furnace oil, LPG, natural gas, so on and so forth. They include the emissions from company vehicles, and they include the refrigerant leak also. So it's all scope 1 emissions expressed in tons of CO2 equivalent with the organizational boundary method. The organizational boundary methods means we need to fix the ownership. Could be fixed based on the equity share. So if the equity share is 50%, the emissions accounted for has to be 50%. It would depend upon the financial control. So it includes the emissions from operations where the company has the financial control, and also the operational control, wherein the emissions from operations where the company has operational authority are included. Coming to scope 2 emissions, they are found in GRI 305 2, where the indirect emissions for purchased energy are included. It includes the electricity which is purchased, the emissions thereof, and the emissions from the purchased steam or the purchased heating or cooling, if applicable, obviously. For that, as we had discussed earlier too, that we need to use the appropriate emission factors from the grid where this energy is consumed. The best practice is the disclose scope 2 emissions using both the location-based method and market-based method. So location-based method means where the grid is located, and market-based method means it reflects the emissions from the contractual instruments like renewable energy certificates or green tariffs. Scope 3 is included as earlier discussed in GRI 305.3, and it might include the purchased goods and services, the capital goods employed in the industry, the upstream and downstream transport, the waste generated in operations, the emissions resulting from the employees traveling. All this would be scope 3 emissions included in GRI 305.3, and it would also include why a particular emission is excluded and the justification that therein, and also point out the significant category drivers and the planned actions. Scope 4 is about emission intensity. So emission intensity could be expressed with different terms in the denominator. So emissions could be expressed per unit output, like per unit per ton of cement manufactured, per kg of product manufactured. Likewise, so it would have a unit like tons of CO2 equivalent per kg of product, per ton of cement, per kWh produced, so on. It could also be expressed in terms of revenue. So, say tons of CO2 equivalent per some $100 of revenue generated or per rupee of revenue generated, like this. So it's less technically meaningful but commonly used for financial reporting, the per revenue in emission intensity. Land footprint could also be included. So in emission intensity, if you account for the area, so it is tons of CO2 emitted per meter square of building or per meter square of campus, likewise. So this gives you an interesting insight about it, the emission intensity, and it is included in GRI 305.4. This is a typical graph which shows how the emission intensity is reducing over time. We should not be happy only with reporting the intensity and the emissions. The report also should include the measures which are taken to reduce these emissions. So that could come in GRI 305.5, wherein we would calculate the emissions reduced due to specific projects and include the baseline scenario and the projected scenario also. Herein, we need to disclose the methodology which has been used, the assumptions which one makes while calculating those, and the description of the project which is involved in that, so that all things would come under GRI 305.5. These are some examples which are used especially by the energy auditors, where they would suggest some initiatives like use variable frequency drives on motors so that the electricity consumption is reduced, or waste heat recovery could be employed so that again the carbon footprint is reduced, or maybe shifting the refrigerant towards more environmental friendly refrigerant, or putting in more energy efficient lights and more energy efficient HVAC systems. All this would be included in this 305.5 GRI protocol. GRI 305.6 is about the ozone depletion substances, ODS they are called as, where one discloses the emissions because of ODS refrigerants, which are being phased out globally, but then many older systems still use them. So proper tracking and disclosure of this is critical for compliance, and that is included in GRI 305.6, especially the reporting on chlorofluorocarbons, CFCs, and hydrochlorofluorocarbons used in older AC systems. The other equally important emissions are NOx and SOx, and though they are not directly carbon emissions, they need to be disclosed, and their common source obviously are the diesel generators, which might have sulfur in it, and that might reduce to sulfur oxide emissions, or the boilers and furnaces, which also contribute to NOx and SOx emissions, the furnaces, the other combustion equipments. All this data is collected and included in GRI 305.7. So this is how your report would be, wherein all these GRI 305.1 to 7 would be included, and your report would have a flow like where the activity is collected, the emissions are calculated, and the disclosures are more made in 305. Okay. So the key points or factors which need to be kept in mind while reporting GRI carbon is about the data quality, the consistency, transparency, and also the improvements which one plan. So all these 4 things are critical in your report of GRI carbon accounting. So for including GRI carbon accounting, summarize, we need to start with the basics, that is focus on scope 1 and scope 2 emissions using GRI 305.1 and 305.2 disclosures. Expand the scope to include scope 3, and use your data to identify reduction opportunities and track the progress over time and communicate the impact in the GRI report. I hope that the GRI reporting protocol is clear to you all. Thank you.